Live with the mortgage calculator. We're going to wait just a moment here to get started, but today we're going to be talking about HELOCs, home equity line of credit. So we'll get into that in just a moment here. We put the chat up on the screen, so feel free to drop a comment there in the chat as you tune in. We appreciate it. And we'll get started in just a moment. Just let us take a second here to go live on all the different platforms. We are streaming this on Facebook, YouTube, LinkedIn, Spotify, Apple Music, and all kinds of other platforms. So let us just have a second here to get live and give everybody a chance to tune in. Remember, we do this at 11 a.m. Eastern time every weekday where we go through the live rates and then do a deep dive into a different topic here. I see some comments already coming in there. Appreciate it. Everybody tuning in nice and early. And it looks like we are live on all the different platforms. We can go ahead and get started. We're going to take the chat off the screen, but feel free to keep dropping comments there in the chat. And also feel free to drop any questions you have as we go through the deep dive topic here in the chat. All right, welcome everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a correspondent lender, and we specialize in non-QM lending. And what we do every morning on this show is go through the live mortgage rates to see what the rates are looking like. And then we do a deep dive into a different topic. Today's topic is going to be HELOCs, home equity line of credit loans. So our sales manager, Jose, with 28 years of experience, is going to do a deep dive into that. But before we do, let's do what we do every morning, which is go ahead and pull up the rates. So Nick, if you're ready, let's go ahead and pull up our pricing tool and see what the interest rates are looking like this morning.
All right, let me switch my screen and we will check it out. So as Kyle mentioned, this is our pricing tool for our team of mortgage professionals. This will show us the rates and the APR. For today is December 11th. We should have new rates issued for almost all of our standard programs. If you'd like a full breakdown, a full loan estimate that itemizes all of the fees that go into the APR, please get with our team members. We have over 400 licensed loan officers in 24 states. For our demos, we always set up a basic scenario and compare across the programs. We'll set a loan amount of $400,000. We'll set the LTV to 80% loan, 20% down payment. And we're going to look for the lowest rates we can offer for conforming conventional. Then we'll check out FHA. And then we'll go into our expanded guidelines, also known as non-QM. We also have VA and USDA. VA is only for eligible vets and active service members. If you are, just let us know. We can quote it, no problem. USDA is only for properties that are eligible. If you do happen to be looking in one of those rural areas, just let us know. We'll start with conforming conventional. We'll do a purchase, 30-year fixed loan, primary occupancy, single-family home, 1 unit, state of Florida, county Miami-Dade. And for all the demos, we use an estimated credit score of 760 and an estimated debt-to-income ratio here of 40%. So with these basic settings, let's check the rates this morning. Pretty much about the same as it was last week, which is obviously good. Everything's been moving down, which is awesome. 6.375 rate with a discount point cost of 2.5 discount points. Puts the final APR 6.672 for this best option here at the top. Now, if for any reason our customer doesn't qualify for conventional, usually the next option we want to check out, we go back to our pricer. We'll set up the same scenario, and this time we'll look for the best option under FHA. FHA allows a little more leniency on credit issues, as well as a much higher debt-to-income ratio, but we'll keep everything exactly the same so we can compare apples to apples here across the programs. And best option at the top here, 5.625 rate, 2.375 discount points and cost, puts the final APR at 6.558. Just a touch under conventional there. So our customers that qualify for both definitely don't overlook FHA, even with the upfront and yearly mortgage insurance here. The FHA is actually just a hair cheaper in this example if the customer qualifies for both. And if they must use FHA, definitely some cool changes that they did last year, which make it very comparable and affordable to conventional. Now, where we love to specialize is if, unfortunately, our customer doesn't qualify for either conventional or FHA using their full documented income, aka 2 years of tax returns. Most other banks or lenders will have to deny that person, but we have over 5,000 options here under expanded guidelines beyond the standard. So everything else will stay exactly the same, but now we have a new option pop up for income. So if our customer doesn't qualify using 2 years of tax returns, also known as full doc, we'll typically choose a non-QM program to take advantage of one of the alternatives. We have asset-related programs, business bank statement programs. The investor versions are just for investments. We'll show that shortly. Personal bank statement 12-month is the most popular one by far. That's what we'll use for the demo. We have RSU programs, stated income programs, BOE programs, 1099, P&L, and no income CDFI programs. All kinds of different options here. And we do episodes almost every week on all those options. For the demo today, we will use 12-month personal bank statements, and that's for our self-employed borrowers. Many times it's the self-employed borrowers that submit 2 years of tax returns and may have various write-offs and either not qualify at all or just need a little bit of extra income. So we'll solve that problem. No tax returns at all, just 12 bank statements to determine a debt-to-income ratio of 40% in this example, using just the cash in the bank, no tax returns at all. So our self-employed borrowers typically qualify for much more income and can therefore get the loan they really want. So let's check out the non-QM options today. Again, not too much activity, a little bit lower across the board here on these top options. 7.625 rate, 2.25 discount points and cost. Puts the final APR 8.039, just a touch above 8. Remember the conventional options were just a touch below 7. So this is typical. It's about 1 point difference there to use the bank statement option non-QM. It was really strange when non-QM was beating conventional for a while there a few weeks ago when rates were going crazy. And you'll slowly see, hopefully, these non-QM rates come down as the conventional rates go down as well. But this is more of a normal market that we're expecting. And if you scroll down here, there's hundreds of different variations of bank statements, some at a little bit higher rates and costs, may allow other issues such as credit events, bankruptcies, foreclosures, other issues like that. And some may use different ways to calculate the income. So hundreds of different options. Please with our team. They will find the best ones for you. And for our final live demos, we always do investment properties. So we love working with investors, first-time investors, seasoned investors. We love to show the options here. So we'll set up the same scenario, 80% loan, 20% down payment. And we'll find the lowest rate options for investment properties under our two categories here, conforming conventional and expanded guidelines, also known as non-QM. Remember, the government programs, FHA, VA, USDA, do not work for investments, so we'll stick to these two here. We'll start with conforming conventional. Everything's going to stay identical. The only thing we've changed is to investment property here. And these are the rates for the conventional. Nice, just under 7 here, 6.99. Looks attractive there for 3.5 discount points and cost. Puts the final APR 7.409. So I believe that's a touch lower than it was last week, which is very cool. For investments, again, these are good options for our customers that qualify full doc, but most of our investors out there are looking to compare a non-QM program, which we'll pull up next. So we'll set the final demo here to investment property. Again, 80 LTV again. And this time we'll find the lowest rates for expanded guidelines, also known as non-QM. So the first thing we need to pick here is the income option, the most popular option, and our most popular loan here at the mortgage calculator, DSCR loan. That's because it doesn't require any income or employment info or documents from our borrower. Simply use the estimated rental income to determine a DSCR value. That stands for debt service coverage ratio. If the estimated rents can pay the expenses, the PITIA of the mortgage, aka the property cash flows, that's a ratio of 1 or higher. We also have options for ratios under 1 where the property doesn't cash flow. For the demo, we'll put 1.5 so we can see all the best options pop up. And finally, a prepayment penalty must be selected. 3 years is standard for non-QM investments. That's what we use for the demo. There are options for no prepay that will cost more and limit what shows up. And same thing with 5 years that will limit what shows up, but does save our customers some money. 3 years is the most common. That way we can see most of the programs show up here. So check out the DSCR rates. Awesome. Looks like, again, a little bit more sharper pricing here. 7.375 rate, 3.125 discount points and cost. Puts the final APR 7.876. So that's absolutely amazing. If you don't catch on there, this is actually lower than a bank statement loan that we just did a second ago for a primary home. We can get an investment property under DSCR for under 8, which is absolutely amazing. The DSCR programs are definitely very attractive right now. And remember, the conventional rates were about 7.5. So to get a DSCR program for nearly identical costs, I would say 100% of investors would probably take up a DSCR loan with the difference in cost only being 0.3. You can do 1, 2, 5, 10, 20 loans at a time to cash out multiple properties, purchase multiple properties. Just a ton of options here under DSCR. And if we scroll down, there's a ton of other options. Some of these at higher rates and costs may allow bankruptcies, foreclosures, other issues. Some of these may allow different ways to calculate income, such as short-term rental income, very popular request. But yes, there's hundreds of options here, hundreds of variations. Please get with our team to find the best ones for you. And now let's switch gears. And we're going to get into our topic for today. Definitely something that we don't get to do all the time, which is our HELOC, home equity line of credit loans. It's difficult to pull those up in the live pricing program. So we will have Jose Gonzalez, our sales manager with 28 years of experience, done a lot of HELOC loans. It was our specialty there for a while. And we will explain how we can put these together. It is a little bit more complicated, so it's harder to do on a live pricing demo. We have to know a few different factors here for the HELOC, and there's a few ways to put it together. So not as simple as clicking a couple buttons. So thankfully, Jose has a couple examples here of how we can properly use this program. Especially in today's market, it's definitely a popular request these days. So Jose, if you're ready, let's go ahead and check out some demos. There you go.
Good morning, everybody. Thank you for joining us for Daily Rates Live with the Mortgage Calculator. Got a few HELOC options for you here today. Just broke it down into a couple of different categories here. We have primary, we have investment, and then we have an option that we do that it is with an AVM only. So let me share those options with you right now. Let me go to the first one here a second. All right. So hold on one second here. Let me make this a little bit bigger. All right. So, excuse me. Home equity lines of credit are not home equity loans. First thing I wanted to make clear, home equity line of credit is an open-ended mortgage, meaning that you basically pay interest on what you owe. So your payment will fluctuate depending on the current principal balance and also depending on the rate, as most HELOC options are variable rate, except for the last option that I'm going to show you, which is our AVM only option. Doesn't require an appraisal, which only and for that product, the interest rate also remains fixed on the draw amount. So it's not a fixed rate per se, but whatever rate you log in does stay fixed for that draw amount. They do allow a limited amount of draws, but I'll give you a little bit more insight on that one. So this one here is a little bit better rate, has a 3-year draw period. As you know, most HELOCs have a 10-year draw period, but this one will give you a little bit better rate options because they do limit the draw period. So in this case, you are looking at a 95% CLTV option, which is pretty amazing. So as you know, most of the borrowers out there probably if they refinance within the last 3-4 years, have a very low rate that they do not want to touch. That is why HELOCs and HELOans are all the rage at this moment. In this particular case, 14.875 is the rate on this HELOC option. You can get a lower rate, obviously, if you get the lower LTV. Keep also in mind the following. This rate is based on a prime rate of 8.5%, right? Plus a margin. The margin is what changes. So in this case, obviously 95% CLTV has a very high margin. But if you were, say, at a 70% or 75% CLTV, the margin is like 1.8. So you'd have a much lower rate. Our second option is the same HELOC investment program. The same HELOC cash out option, but for investment properties. Now, this is very interesting because, investment properties tend to be a challenge. Now, this is not a bank statement option or anything like that, but it is for an investment property. This particular option, they do cap the CLTV at 70% for this investment option cash out HELOC, but still very attractive for the investors looking for a HELOC where they only want to pay on what they owe. That is the benefit of the HELOC, because you can accelerate the payment, pay it down, and then reuse it. That's the whole purpose of the HELOC. If the borrower is looking to get that second mortgage and is not looking to get on an accelerated payment plan, then probably the best option for that borrower would be a HE loan, a home equity loan, which is a closed-end product, meaning there's a fixed rate, there's a fixed amortization schedule. Your payment does not vary based on what you owe. So you can plan a little bit better. But again, it really depends on the what they want to do. I mean, until recently, this would not have been a point to discuss because the only options that were viable were HELOCs. But now with all the home equity loans that we have, and some of them very low rates on those home equity loans, and obviously the home equity loans also allow more income options, right? We can go full dog, we can go DSCR, we can go bank statement. So many options. But back to our final option here. This is our AVM only HELOC. This is an amazing program for everybody out there. Just so that you know, this is, I guess I would consider this the best of both worlds, because first and foremost, there are it's reduced fees, right? You don't have to worry about an appraisal. An AVM is an instant product, so we're going to know pretty quickly if it's going to work or not with the value. We don't have to wait 10 days, 15 days for an appraiser to get there, come back, and also other issues that may arise with an appraisal that would not be a concern with this product. Obviously, the AVMs are a little bit more conservative always than a true full interior exterior appraisal. Maybe, but that doesn't mean that you're not going to reach the same value. Just it is a little bit more conservative just because of the nature of the product. But the main key here, also, like I was mentioning, is that this product does have a fixed rate feature for the draw amount. So at closing, you draw $75,000 at 10.15%, but you are approved for, let's say, $200,000. Okay, so your first draw is going to stay at that interest rate. Then your next draw will be based on whatever the rate is at that moment, and then that draw will be set. So you're going to have multiple tiers, I guess, to follow in your statement, like draw one, X dollar amount, draw two, X dollar amount. They're going to be at different interest rates. So this is a very good product, 10.15% at 85% LTV. which is still going to be considerably lower than the regular HELOC option at 85%, because that option at 85% will probably be somewhere around 12.5 to 12.75% plus an appraisal. So very good options here on our AVM only product. And I do suggest that you reach out to us if considering a HELOC for this great option. And if not, also speak with your loan consultant when you do reach out to us about your HELOC options. Now, the HELOC only goes up to, the maximum option is 90%. So if you need the 95, if you're doing a piggyback, for example, and you need that 95, then you got to do a HELOC.
All right, great stuff there. Some good options. I don't see any questions in here, so I think we can wrap it up. Excuse me. If you're looking to do one of these loans, remember we have over 400 loan officers all across the country, so you can get in touch with us at themortgagecalculator.com. We appreciate everybody tuning in. Remember, we do this 11 a.m. Eastern every weekday where we go through the live rates and then do a deep dive into a different topic. So we'll be back here tomorrow with a new topic. We appreciate everybody tuning in. Thank you, Nick. Thank you, Jose. We'll see everybody tomorrow, 11 a.m. Eastern, for the next episode of Daily Rates Live with the Mortgage Calculator. Have a great day, everyone.
Thanks, everybody.